So as you might imagine, there's a few questions on gold. So it seems like consistently poor performance is weighing on a large degree of sleepy long interest. Are there any behavioral thoughts you would add to this latest plan?
Yes, and I do, while I do appreciate Mark Levin's constitutional knowledge base, I don't appreciate the fact that the Patriot Channel has been running gold commercials for the last 3 to 4 years of the decline. I do think it's time to hold everyone to account. When you're trying to promote an ideology, you can't ignore the risk management. I really don't appreciate that. If you go to the behavioral side of this, what happened in 2011, and we were bullish on gold from 2003 to 2011. It's fine. Mark Levin, you probably would have loved me back then. Now you don't like me at all. I'm cocky or something. Something that isn't you, okay? But the reality is that I'm not you, you're not me, and behavioral cycles that are associated with expectations are constantly changing. So I'd go back to 2011 and say that gold's price expectations peaked when inflation expectations peaked. That's it. Point final. Finite. Finite. Finito. Petito. That was it. 2011, don't forget, for those of you people who have studied history, was the 40-year low in the US dollar index. Okay? So at the all-time low, with Bernanke doing the QE into Jackson Hole. Remember this? Remember? Growth was slowing. Utilities were outperforming. Financials are getting hammered. Bernanke brought the wood. The QE come online. People are like, oh my God, this is going to be hyperinflationary. So then ultimately the Fed changed how they look at inflation, so you couldn't really have reported inflation. Real world inflation really peaked in 2011. So did tips, so did inflation expectations. Now, on the deflationary side, all the things that were born out of that on a lag, Bitcoin, you know, think about these bubbles. They were all an inflation expectation. Now we've gone through the phase transition to deflation expectations. And like only Mr. Macro Market could, it allowed plenty of people an opportunity to get out when they screwed it up the first time. Again, the big screw up was July to January, in July of last year to January, when bond yields hit their all-time lows, bonds hit highs. That was a pretty shocking thing for people. The more shocking thing to me is that people immediately chased the rally in oil and gold back to lower highs, when the deflationary and secular deflationary call from both a supply and demand perspective is very obvious. So now we're in deflation expectations, and gold does not like that. You know that, I know that. And if you want to go back to the early 1980s and study the combo of strong dollar and rising interest rates, gold would really not like that. All you've had here is the most epic move in the dollar. This is a long answer to a very important question. But how dare you people out there be ideological about a barbarous relic like gold?